Welcome back. During this lesson, we're going to discuss investing. Now, investing is always a good thing to do. Start with your most recent paycheck and just start moving forward. It doesn't have to be something, in fact, I was just having a good conversation with my employees today talking about putting money aside and investing. And everybody wants to have $1 million invested, right? But what was the thing we talked about when we talked about stocks? You never, ever invest money that you can't afford to lose. If that money needs to be used for your mortgage or rent or a car payment, don't spend it. Put that money into your savings account or your checking account. But money that's extra, that if you lost it, it would hurt, but it wouldn't put you out of the house, if that makes sense. Okay? Now, there's a good analogy. Remember the tortoise and the hare, how they talk about, the tortoise, slow but steady, and wins the race. And the hare's super fast, and then he gets tired, and he rests by a tree, and the tortoise passes by. And then he gets up and he runs again, and then he ends up losing the race. So the tortoise saves a little regularly over a long period of time, while the hare waits until the last minute, and then begins to save frantically. And so their lifestyle goes down because they have to put more money in now. So you at a young age, if you started investing now, putting a little bit aside, then you're going to be okay making sure that you're taken care of because that money will grow. And a lot of people say, well, if you invest in the stock market, you'll lose it and come back. But like we talked about during stocks, when you're investing, over time, that money has proven to grow. So just looking at the notes here real fast. And one of the reasons you want to make sure you're getting a healthy return on your investment is inflation. So anytime you invest, you want to get money back, right? Nobody invests money just to put it aside and make nothing. You might as well take that same money out of the bank and put it under a mattress because that's about as much good as it's going to do you. So let's imagine, and I pulled up on my other monitor there, in 1974, you took a $100 bill, okay? And that $100 bill, you put it in that shoebox. In 1974, grab my pen here, the gasoline was 50 cents a gallon. So that means you could have bought 200 gallons of gas. How crazy is that? Now, gasoline at the current point is going back down again. So the average price of gas right now is $1.75. So instead of 200 gallons of gas from 1974, today you can get 57.14. It's about 25%. That's inflation. Cost goes up, money doesn't increase in value, money stays the same, so inflation actually makes your money worth less. Let's talk about a few more items. I actually think this was really interesting. So bread in 1974 was 28 cents a loaf. 28 cents! So today, you're looking at, let's type that in. So price of bread. The average price of bread right now, you're looking at about $3. 23 cents, $3. All right. The price of a stamp in 1974 was 10 cents. You could send a letter for a 10-cent stamp. That's great, right? Do you know what the price of a stamp is now? 49 cents. 49 cents. Huge increase. Inflation. Let's look at the price of milk. Everybody likes milk. I love a good whole milk, right? Maybe get a couple donuts. In fact, in college, you guys will laugh. I was working out, trying to put on weight. And so you have the Slim Fast diet, right? To lose weight. Well, me and my buddies, we were trying to gain weight, muscle mass, and be big and cool and strong. So I created the Fat Fast diet. And the Fat Fast diet is I'd eat 2 Twinkies a night, right before bed, and a big old cup of whole milk. No working out, no doing anything after you eat that because I wanted to put on all the weight. Yeah, it didn't really work. So the Fat Fast diet flopped for me, Brother Stevens. All right, so the price of milk in 1974 was $1.39. Today, look it up. The price of milk is $3.69. Huge inflation. This is the one that killed me the most. Price of a car, the average price of a car in 1974 was $3,500. Okay, $3,500. Price of a car nowadays, what one do you want? I saw a Nissan GT6, $101,000. I see Fords going for $47,000. Right? Gone are the days of cheap cars. Let's look this up real fast. Median So the median household income in the United States right now versus 1974. So this is where inflation comes into play, as we talked about. So back then you could get, like we said, 10-cent stamp, bread for 28 cents, milk, a car for $3,500. Well, the average income in 1974 was $9,668. So a car cost you 33% of your income if you paid that car off in a year. The median income right now in the U.S. is $53,891. Okay, so you can see 9,000 to 53. So has income risen compared to the cost of goods? No. So that is where inflation comes into play. That's why you put money aside in investing. Okay. So not everything goes up though. I remember when the big plasma TVs came out and they were thousands and thousands of dollars, and now you don't want plasma, you want LED, right? And I remember when LED came out, thousands of dollars. Now I can buy a 42-inch screen as of today, 42-inch screen, super thin, flat panel, LED, HDMI, 1080p TV for about $300. Get on sale Black Friday, which is a good idea. We talk about sales all the time. You know, you can get that probably for under $200. Depending on the deal. So you can see computers when they first came out, thousands of dollars. Now you can buy, just this morning, we found a deal on a 4th generation i5 processor desktop computer, $250. So there are some items that do go down in price as it becomes more efficient, making it becomes easier. Okay, economists, they'll actually go through and they will check the different things. We talk about barrels of oil, investing in that. You have people who invest in the stock market. You have people invest in all sorts of different areas. So there's a lot of different areas that you can invest your money, okay? And there's a lot of different tools that you can use. Talk to your parents. Talk to investment counselors, advisors at the bank, read books, and educate yourself, okay? When you're talking about investment, I love what Ronald Reagan stated. Trust, but verify, okay? Don't ever invest in something where someone says you have to invest in it right now. If you don't do it right now, you're going to lose. My wife and I have a rule of thumb. We don't buy anything or invest in anything unless we can sleep on it and think about it. Now, are there times where I may have lost money I could have made real fast cash? Maybe. I'm yet to be aware of something where I could have made money had I invested right then. Always take time to think about it. You can trust the person all day long, but verify it. And if a family friend or a family member gets upset saying, well, don't you trust me? Just tell them what I say. I never invest, I never buy a special super deal without first sleeping on it. Now, if I know I want to buy a TV and I educate myself, right, and I find a good deal, I've already been sleeping on it, I know what I want to spend, then I can buy it then. But if someone comes and says, Brother Stevens, we've created a new super pen. So this is a cross pen my wife got me for Christmas. And for those of you who don't know, I love to write in ink like that, a fountain pen. And so you'll see me whenever I whip out my pen, it's this right here. So if someone came to me and says, hey, I have the ability right now, we are going to invest in this company that makes these, okay? And by making those, if you invest $100,000 right now, I'll get a return on your money within 6 months of 20%. Sounds too good to be true, right? Maybe, maybe not. Maybe it's legitimate. However, once again, if someone came to me, and many people have, I would tell them, let me think about it, let me do my research. I usually hire an accountant to go look through the books. If they're not willing to allow you to do those things, then how good is that deal really? Okay. One area we've talked about already are CDs. right? A certificate of deposit. With a CD loan, you put your money into a bank account. It could be a 12-month CD, a 6-month CD, whatever the term is. Once again, this is money that you can't take back out. It has to be set for that certain period of time, otherwise you're going to have financial charges, okay? You can find them in newspapers, right? You can go through and your bank will be advertising them. Talk to your bank, because if you have money that you don't need to use, put in a CD, you're going to make more money than you would typically in a checking or savings account. We've talked about IRAs and Roth IRAs, about how you invest it. Real estate, this is probably one of the best areas, in my opinion, that you can invest your money. Even with the mortgage meltdown, even with the bubble bursting, the average home increases in value 3% a year. It's a forced savings account, in my opinion. And we'll talk with some professionals later on about real estate. But my grandma, Stephen, she taught that investing your money in real estate is one of the best things you can do, right? I can always make more pens. I can always make more paper. Apple will always make more cell phones, more books. But one thing you can't create more of is land. Heavenly Father created so much, and that's all there is. So as land becomes more scarce, it goes up in value. The home goes up in value. This is one of the best things you can do. Thank you.